Hi, everyone. I'm Charlene Reinhart, and I'm a certified public accountant with a passion for helping you make the most of your money and make better decisions. I truly believe that your net worth is the sum of all the decisions that you make. So, what decisions are you making today to be better than you were yesterday? Today, I'm excited to share some valuable insights that will help you make the most of your flexible spending account benefits before the year comes to a close. So make sure you give this video a thumbs up and subscribe to the Wealthy Woman Daily channel below. Now, if you're not familiar with FSAs or you've heard about them but aren't quite sure how they work, you're in the right place. I actually signed up for an FSA 1 year so that I can go behind the scenes to evaluate the pros and cons of having this type of account. Now, FSAs are a fantastic tool for managing your healthcare expenses while, my favorite part, saving on taxes. But they do come with some rules and deadlines you need to be aware of. So, in this video, I'll break down the basics of FSAs, explore eligible expenses that might surprise you, and provide you with practical tips to make the most of your FSA dollars before they expire. I love talking about tax advantaged accounts because you may have access to these accounts through your employer, but may have no idea how to use these accounts to their full potential. So let's start with the basics of FSAs. A flexible spending account is an employer sponsored health benefit. That means you need an employer in order to have a flexible spending account. Now, if you're self-employed, you can get access to a health savings account, but a flexible spending account is one of those employer-sponsored benefits. You can use an FSA to pay for IRS-approved medical expenses for yourself, your spouse, and qualifying dependents. So this account is not just for you. If your child needs items, qualifying items, if your spouse needs qualifying items, you can dip into your FSA funds to pay for those qualified medical expenses. Now, if you don't use all the money in your FSA by the end of the year, you may end up losing some or all of those funds. And FSA is known for its use it or lose it feature. So you need to know how long you have to use the dollars in your account before you lose them. I remember when I had access to my FSA, I wasn't sure if my employer was going to give me a grace period to use the funds in my account or allow me to carry over some of the money to the following year. So what I did was I went shopping with my extra dollars in December. I spent the majority of my dollars in December, and I bought items like menstrual supplies, acne treatment, medicated lip balm. All of those are qualified medical expenses. So, what can you buy with your FSA dollars? Well, there is a long list. I took a stab at putting together a list of 77 FSA eligible items to buy before your money expires. So, on this list, you're going to find dental expenses like braces, crowns, dental bridges, implants, veneers, filings, and then your vision expenses, contact lens solution. Don't forget about that. Your contacts, eye drops, eye exams, and then mental health, family planning, emergency, and everyday items. Let's dive into 5 surprising items that you can use your FSA dollars on. Number 1, sunscreen. Yes, I said sunscreen. Your FSA funds can be used to buy sunscreen that has an SPF of typically 30 or higher. Now, sunscreen is considered an eligible expense because it helps protect against harmful UV rays, which can have health implications. So add sunscreen to your list of qualified medical expenses if you don't have it on there already. Number 2, prescription sunglasses. You probably already know that you can use your FSA dollars to pay for prescription eyeglasses, and contact lenses, but now you can add prescription sunglasses to the list as well. So if your eye doctor prescribes prescription sunglasses to address a specific vision condition, the cost of these sunglasses may be considered an FSA eligible expense. Number 3, lip balm. Yes, don't forget about that lip balm to avoid chapped lips, especially in the wintertime and those drier months. But check with your FSA custodian. Some FSAs allow for the purchase of lip balm as an eligible expense, especially if it has sun protection properties or is recommended by a healthcare provider for medical reasons. So reach out to your FSA custodian and ask about the requirements to pay for lip balm with your FSA. Number 4, acne treatment. And that includes over-the-counter acne treatments like this one. Creams, gels, washes, all of that can be FSA eligible expenses if they are used to treat a medical condition. And typically, your healthcare provider recommends it. Number 5, this was added to the list in 2020. We have menstrual products. Many FSAs include the ability to purchase tampons, pads, menstrual cups, and things of that nature as FSA eligible expense. So now you can use your FSA funds to pay for essential items that you need every month. Your tax-free dollars are able to go further now because of those added benefits that were provided in 2020. Let's dive deeper into the basics of FSAs. So there are 3 main types of FSAs, and that's why it can get confusing. So what I'm talking about here is a health FSA. These accounts are for general purpose healthcare expenses, including over-the-counter medications and monthly period supplies. Now, your limited purpose FSAs are typically limited to dental and vision care. Then you also have dependent care FSAs, which can come in handy if you have qualified dependents. So they are used to pay for qualified dependent care services such as after-school programs or adult daycare. How does an FSA work? Well, I mentioned earlier that it's an employer-sponsored account, so you can only have an FSA if you work for an employer that offers this type of benefit. So ask your employer if they offer FSAs and HSAs so that you can save money on some of your qualified medical expenses during the year. So payroll deductions. An FSA is funded by deducting money from your paycheck to fund your FSA. During your benefit enrollment period, you have a chance to determine if you want to take advantage of an FSA. And then you'll also have to choose how much of your salary you want to put into an FSA for the year. That will determine how much money is taken out of your paycheck. Now, some employers also contribute to employees' FSAs, but they are not required to. So talk to your employer and find out if they will add money to your FSA as well. So once the money is in your account, you have this money to use it however you want on qualified medical expenses. Let's talk about the taxes, because you may be looking for ways to save money on your tax bill next year, and an FSA can help you do that. Let's say your annual salary is $50,000 and you contribute $3,000 to your FSA. That means you will only pay taxes on $47,000. You will not pay taxes on the $3,000 that you contributed to your FSA. Now, you also won't be able to claim a tax deduction for your contributions because your FSA dollars were never taxed. So that's how the taxes work. It's going to reduce the amount of money you're taxed on. Now, there are limits to how much you can contribute to an FSA every year. So you need to be aware of those contribution limits. For 2024, you can contribute up to $3,200 to your FSA. That's up from $3,050 in 2023. So you can contribute $150 more in 2024. An FSA is known for its use it or lose it feature. So you want to know how much time do you have to use the dollars in your account. Typically, you have to spend the funds in your FSA by the end of the plan year, but your employer may allow you to carry unused funds over to the next year up to the IRS limits. So be aware of those IRS limits. That can help you plan ahead. Now, if your employer doesn't allow you to carry over FSA funds, they may offer a grace period. This gives you extra time to use the money in your FSA before you lose it. So when I had my FSA and I tried to spend all my dollars in December, it didn't work out. I had so much FSA dollars left over. And so luckily I was able to use some of those funds in the following year. Now, if you do get a grace period, it's typically 2.5 months, but you want to ask your employer what your grace period is. Now, your employer can offer either a carryover option or a grace period, but not both. Also, your employer doesn't have to offer either one, so be mindful of that. Here's the downside of an FSA. If you don't spend all the money in your FSA before the deadline, you risk losing the funds you contributed to the account. Your employer cannot return your FSA dollars back to you directly. So during your open enrollment period, you want to be able to estimate your medical expenses that may be coming up so that you don't have dollars left over at the end of the year that go down the drain. You may be able to purchase your qualified medical expenses with an FSA debit card. It is so convenient. So an FSA debit card is linked to an employee's flexible spending account. So anytime you use your card to pay for qualified medical expenses online or at a store, the money automatically comes from your flexible spending account anytime you make a purchase. So it's used just like any other debit or credit card at checkout, either in person or online, to access pre-tax contributions an employee makes to their FSA for qualifying expenses. If your employer doesn't offer an FSA debit card, then you'll just need to submit a reimbursement request to make sure you are reimbursed for the money you spent on your qualified medical expenses. So you want to reach out to your employer or FSA custodian to find out if they provide an FSA debit card. Ask your employer or FSA custodian how it works, what falls under the qualified medical expenses list, and when is the deadline to use the funds in your FSA. It's so important to find out what benefits are offered to you and how they work so that you're not leaving any dollars on the table. Just think about it. Some of the essential items that you buy at the store can probably be classified as a qualified medical expense, and you could be using tax-free dollars to purchase those items. So that should motivate you to go to your employer and find out what benefits are offered. I want to thank you for joining me today on the Wealthy Women Daily YouTube channel to learn how to maximize your flexible spending account benefits before your deadline. It's been a pleasure sharing this information with you, and I hope you found it valuable. Remember, your FSA is one type of tax advantaged account that you can use to pay for qualified medical expenses. There are also HSAs, and so you can go back to my videos and dive more into health savings accounts and how they work so that you can save on taxes. But if you have any questions or need further guidance, don't hesitate to reach out to your FSA administrator or talk to a financial professional. Type in the comments here if you want me to answer any of your questions that you may have. And please share this video with your friends and family who may also benefit from this information. I know when I started working a full-time job, I had no idea about the benefits that were available to me. So this video would have helped me tremendously, and I would have been able to save so much money. So feel free to share. But before we wrap up, if you haven't done so already, be sure to hit that subscribe button and turn on notifications so you stay updated on all the financial tips and advice that we have coming your way. I hope you have a great week. Thank you.